Alrighty, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. We're coming down to the end of this challenge. Have a few more trading days here yet. We are going to start the next challenge on the 26th of this month. So looking forward to doing that here. But let's get to it. Entry triggers today. There are none here for the challenge. We did have a few upside crossovers early this morning. They haven't held. We have one downside crossover in the mix here today, and that's on on Coca-Cola. We'll go take a look at tea a little bit. But Coca-Cola has a downside 3-7 cross, but coming off of a new high. That's more of a short-term pullback rather than some sort of trend starting to emerge here with it. So not a whole lot to really sink our teeth into. Market, just not really providing great trends. We're seeing a lot of, trends come off of bottoms. What do I mean by that? Stuff like a caterpillar, where we're seeing some really strong trending action, but coming off of these bottoms, not off of higher lows. And the challenge is built to be off of higher lows and lower highs, not to be built off of lower lows and higher highs. And, that is something that, we'll kind of, when we see this type of action, will kind of leave me more, sidelined than aggressive. But we have one position on the board. We're hitting our time stop here this afternoon, so going to pull off Apple and move on here from Apple. It does have its Apple stuff here tomorrow, product launch stuff here tomorrow, so we'll see kind of how that all plays out, but I am not willing to hold it over that. 641 is my fill price on the exit, so let me make sure the alert goes out here, and we'll send that. One of the reasons I'm not willing to hold it is there's a good bit of IV put into that, and it is something where a $2 to $3 move, we can see the option itself actually depreciate 30 to 40%. That's going to take a lot for it to go down that much, but even a $2 move lower in the price plus the IV loss, from having the event could really damage that option pretty good. So not willing to take that risk here with it, and so pulled Apple off, and looks like the alert is gone. So out at 641. So let's fill that in where that leaves us here for the challenge. So 641 is the exit price there. Exit is 9 p.m. Here on it, and so that should leave the let me make sure it's adding those. There we go. So that leaves the challenge, here with 8,500 in gains, 8,600 in gains, just sitting, just south of the 12,000 mark. I feel like we've been here for 2.5 months of the challenge, and we kind of really have been pretty much here since the 4th of July. The challenge value has just pretty much been stuck on this level. We've had a little bit of uptick from it, a little bit of pullback down to it, but you can see 1, 2, 3, 4, 5, 6, 7 out of the last 9 challenge trades have been in the red. We've been able to kind of continue this level. So, I know trades in the red are never any fun and anything like that, but the challenge is doing what it's designed to do in these really kind of choppy, time periods here. Now, I was asked a really good question over the weekend. I promised I'd respond here on video, but the question was, hey, Jeff, the number of signals for this challenge seems to be lighter than what you expect from, the 30 and 60-day summations. Have there ever been time periods in the testing over the last 3 years where you've had this few signals? And it's a really good question, and the answer is no. In fact, this, just for a pure time period standpoint, this is the fewest signals that we have had. But there's a caveat there, right? And let me show that to you here. Here's the S&P, and we've been testing and doing stuff with the algorithm and tweaking it and everything else here for a while. And we got into this period right back here in September, October, November last year. So this kind of time period last year, and we saw drop down, kick up. We had some nice put signals come in. Most of them didn't pay off. That was kind of interesting to see. They didn't really pay off. Then we had some call signals come in. They didn't pay off. We had some put signals come in, and they didn't pay off. Yes, there was some downtick in the market, but we weren't getting the option action, that we need in order to pay them off, right? It's one thing to see a trend, another thing to have the option action, pay it off. And then we did get paid off, here in December. But there were a lot of whipsaws, right, in this time period, and you've heard me say before that one of the things we've done with the algorithm after this period is we tightened it up a little bit, and tightened it up to avoid some of these whipsaws a little bit. And if we were running the exact same algorithm that we were running back here, then the number of signals coming in is about normal. But because we're running a tightened version of that algorithm, because of this period back here on what we saw, and let's face it, the metrics have done very similar things to what we saw back here in the chop. We have tweaked it so that when the market's seeing this, it's a little tighter on the signals. It's not going to get as many, just simply because it's harder to pay them off, right? It is simply harder to pay them off. So with long calls and long puts, right? Again, you go into the day trading, go into the spreads, you do other stuff, fine. But for the challenge, to pay it off there. So we haven't seen a lot of signals come through during this period. And if we had been running this exact same algorithm right back here, we'd be in a lot worse shape right now. We would have been whipsawed out a lot, especially on the put side. We would have had some pretty hefty put positions on some things, and I'll show you a couple. One of them is Caterpillar. And this is one that, let me pull up the 3-7 action. Right here we had a downside crossover right here on this day, right? And you can kind of see what happened. Yeah, it did go lower here, brief time, but quickly snapped back by the time it hit. I mean, that stopped there. The IV came into. I mean, the options were down about 70% on that play there, and one of those where the IV dropped, the price action really went hard the other way. And so had we been running that exact same algorithm, there's a few of these that would be caught up in, and that's why we tightened it, right? We tightened it to avoid that. We can't avoid it 100%, and it is one where overall I'm happy with what the algorithm's doing. I wish the market were in a little different type of position, but one thing we know about the market is it ebbs and flows and changes, and the conditions, and we've talked about that. We've talked about that plenty here. Okay. So anyway, out of Apple, leaves challenge in all cash right here, looking for the next signal. Again, Coca-Cola, not a downside signal here today, as it's coming off of new highs with that downside 3-7 crossover. Here on the stock. This morning, AT&T. It was announced that activist investor getting involved, yada, 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 all that stuff. And, I'm sure those of you, and I know we have several in the community who are long and strong AT&T. We've done a lot of discussions. We've had a lot of discussions on AT&T going back to last year, early this year, just from an investment side. And the investment nature of it, and there's not a lot out there that I would say, hey, is comparable to something like AT&T, or from an investment side that it was or is equal to AT&T, and it's been a good run, right? It's been up and down all around, but overall, we have a stock here that's gone from 26, 28 up to 36, 38, which from an investment standpoint, great. Now, big gap up here today. Investor action coming in, or activist investor action coming in. How's this going to affect it? What's going to happen here with it? And it's one of those things where whenever we're dealing with activist investors, coming in, and activist investors getting involved in a stock, there is almost always a run up into the announcement. Almost always. And in the case of AT&T, there has been a strong buy-in over the last month here into the stock. And one of the big reasons is, the activist investors building a position, right? Before they have to announce and before they have to, really get involved, they start to build a bigger position, right? So you almost always see it run up. Then what tends to happen is you tend to gap up. And then more often than not, you get it faded. You get it faded, right? You get investors that say, look, I don't want to be involved in the headache and the drama, in the, caught up in the wash of, what the activist investor is going to be doing and, the waves that they might be making. And oftentimes you do get a pullback. Then you get a chase. I mean, the activist investor needs to press something. They come out with a good idea. Everyone's thinking, hey, this is great. And typically the stock will go back to a new high. After that, there's not a real consensus or tendency that I look at and go, well, I'm really convinced this is what it's going to do. We see cases where it just flies. We see cases where it tanks. We see cases where, the activist investor says, I'm done with this. I couldn't make any headway with management, so I'm gone. And the stock deflates in a big way here with it, right? So we kind of have this. We have this position now. We've talked about AT&T in terms of the dividend, right? The investment thesis on AT&T had everything to do with with the dividend of the stock, right? And the dividend yield, and it just being in this historical area, up in the upper 6-7%. But you can see here today, coming back down to 5.5%, right? This is getting down towards more of the low side than the high side over the last while, right? So it's an area where, yeah, I would not be surprised to see the yield come and break down below 4%. I still think there's a good possibility of that. But in terms of the investment thesis, it's nowhere near as strong based on just the pure dividend here at this point. So if I'm looking to buy, if I'm looking to get in, what am I doing? I'm looking for this tendency of, okay, we get the activist investor. Now, okay, I'll look to buy on the pullback. When the pullback comes, then I'll look to be a buyer and ride that next wave higher, right? And so if I'm not in AT&T, that's what I'm looking to do. Being in AT&T, there's several things you could do. You can sell shares, right? This morning pre-market, I sold a big portion, said I'll wait for the pullback. I still have some. You can also sell covered calls, right? You can come in and say, well, you know what? Path of least resistance may be lower, but I do not want to get rid of this position, right? I don't want to be out of AT&T, so let me go and sell some calls. Now, the bad news when it comes to AT&T is you just don't get paid all that much to sell calls in the short run. You get paid a little better in the long run. So, you can look at some of the 40s or something like that, or even the 38s. You can sell the 38s for $1. Which is decent, which is definitely decent there. You'll catch another dividend round in all of that. So that's another way you can offset it there. But the tendency, and it doesn't happen every time, but the tendency is beautiful gap up, beautiful move, and then you see it faded, and then it goes back up to a new high. And, that's what I'll be looking for here with that. Now, we recently had Lowe's, who was involved with some activist investors, and it happened in February, and you can see the stock gap up really nicely here on the activist investor news. And it came after a big run up. Shocker, right? And this one had the fade, right? Had the fade. They faded it. They sold it. And then, boom, what do we see? Push back into a brand new high. And then since then, it's just, none of this is activist investor related, right? It doesn't have anything to do with it. It goes back to what's going on at Lowe's. What are the fundamentals? What's happening, with earnings, revenues, and all of that. So when it comes to AT&T, that's what I'm looking for. That's what I'm expecting. Playing for here. Okay. All right, now we did have a very interesting open in the market today, and it's held up throughout the day, and a lot of differentiation. And when we talk about differentiation, what we're talking about is not necessarily each sector doing what the market does. And for the last month and a half, we've been in a period where if the market's up 0.5%, most sectors are up, 0.4 to 0.7%, somewhere in that area. Everybody's in, everybody's out. There's not a lot of differentiation between the sectors. When the market's down, some sectors are down more than others, but overall, not a ton of differentiation between the sectors. Take a look at the sectors today. We have a market that's pretty flat. It's down 3 points right now? And we have the XLE that's up 1.8%. We have the financials that are up 1.6%. If you were to say, hey, the S&P is red today and the financials are up 1.7%, if you would have told me that, here on Friday, I'd have been like, yeah, possible. Not likely, but possible, right? If you would have told me that 2 weeks ago, I'd have said, no, impossible. Impossible. There's not enough differentiation in the market. But we have seen the market switch a little bit. We've seen the market, come into these bullish metrics, which means what? Much more differentiation, and we are seeing a high level of differentiation here today. Look at the sectors that are red. Consumer staples, utilities, materials, healthcare, real estate. And you can go, you know what? These are all more defensive sectors, except for materials. That's kind of a little exception there. But, the more aggressive sectors, communications, consumer discretionary, industrials, financials, energy, those things are leading the way. That's a pretty bullish stack, right? That's a really bullish stack. And then you come down to the bottom and you go, technology? Really? The biggest laggard today is tech. And, we don't see this in bear market conditions, right? The only time we'll see differentiation that's this large, that's this from sector to sector, really comes into, bull markets here. And, we're seeing, Microsoft here, down 243, right? Down 243 here today. Just absolutely getting plowed under. And not with a whole lot of, massive reasonings. There are a few things circulating out there. But, Adobe pushing into a new short-term low, right? We have Twilio, which is just absolutely getting boat raced. You've heard me say many times that this is one of my favorite stocks in the market long term. And I am very much, chomping at the bit, looking at this sell-off going, wow, this could get really interesting. But I need to see some bottoming action, some stabilization action come in first. But, we're seeing some very hefty differentiation out there in the market. Let's face it, Apple would probably be down $3 to $4 today if they didn't have their product launch tomorrow, right? That kind of saved the stock a little bit, kept it from pulling a Microsoft here today, and so it's one where that differentiation is very real. We see it happening, and I will be very surprised if we don't see it continue here over the course of the next several weeks in terms of this this hefty differentiation. Thanks for hopping on. Have yourselves a fantastic evening. I'll be back on here with you tomorrow morning, and we'll talk to you then. Take care.